Direct labor costs are a critical component in the world of manufacturing and service-based businesses. These costs refer to the work performed by employees directly involved in producing goods or providing services. Today, I want to delve into the fascinating case study of Fabri Craft, a textile company that has mastered the art of maximizing efficiency and controlling direct labor costs. By understanding their strategies, we can glean valuable insights applicable to various industries, ultimately paving the way for enhanced productivity and profitability. Fabri Craft has built its reputation on delivering high-quality products while maintaining a commitment to excellence and customer satisfaction. But how do they achieve this? The answer lies in their meticulous management of direct labor costs, which is pivotal for optimizing output and profitability in the manufacturing sector. Fabri Craft has implemented various strategies to ensure efficient production processes and robust cost control measures. One of the key takeaways from Fabri Craft's approach is that efficient management of direct labor costs enables the company to enhance productivity while offering competitive pricing and maintaining the highest quality standards. By allocating resources judiciously and optimizing labor utilization, Fabri Craft can effectively meet market demands while maximizing profitability. This agility allows them to swiftly adapt their workforce to align with production requirements, minimizing the risks of overstaffing or understaffing. Let's break down how direct labor functions in both manufacturing and service-based businesses. In the manufacturing realm, direct labor encompasses the physical efforts of employees engaged in production tasks. At Fabri Craft, this includes skilled workers operating machinery, cutting and sewing fabrics, and packaging finished products. Their expertise directly impacts the quality, efficiency, and success of textile production. On the other hand, in service-based businesses, direct labor involves employees who interact directly with customers. Think about the staff assisting customers, providing guidance, and offering personalized support. In both cases, the contributions of direct labor are invaluable. Now, let's talk about the components of direct labor costs. It's not just about wages, it includes a variety of elements such as employee benefits, payroll taxes, retirement contributions, health insurance, and workers' compensation. Fabri Craft ensures a comprehensive assessment of total direct labor expenses by accounting for these costs. This holistic view allows them to understand the true cost of their workforce. The impact of direct labor on efficiency and quality cannot be overstated. At Fabri Craft, the skills, expertise, and dedication of each employee determine the speed of production and adherence to quality standards. The company fosters a work environment that values and nurtures employee skills, which in turn maximizes their potential. When employees are invested in their work, they are more likely to meet or exceed customer expectations. To manage direct labor costs effectively, accurate measurement and allocation are essential. Fabri Craft employs various methods to track direct labor expended on production tasks. One common approach is using time clocks, where employees clock in and out at the beginning and end of their shifts. This traditional method provides a basic record of attendance and working hours. However, Fabri Craft takes it a step further by utilizing electronic systems or software that capture more detailed data. Employees can log their hours worked on specific tasks or projects, allowing for a more accurate allocation of labor costs to particular products or services. This level of detail is crucial for understanding where resources are being utilized and how they can be optimized. Understanding the distinction between fixed and variable labor costs is another critical aspect of effective cost management. Fixed labor costs remain constant regardless of production levels, while variable labor costs fluctuate based on the amount of work performed. By differentiating between these two types of costs, Fabri Craft can make informed decisions regarding workforce planning and budgeting, ultimately leading to better cost control measures. Now, let's talk about how direct labor costs play a significant role in overhead allocation. Overhead costs, such as utilities and administrative expenses, are necessary for the company's overall operation but aren't directly tied to specific production tasks. Fabri Craft allocates overhead costs based on the proportion of direct labor costs incurred. This method ensures that costs associated with direct labor are appropriately distributed across the product or services being produced, preventing undercosting or overcosting. By accurately measuring and allocating labor costs, Fabri Craft gains valuable insights into efficiency and cost management. For example, calculating the direct labor cost per unit is fundamental to managing labor costs effectively. This calculation allows Fabri Craft to evaluate labor utilization and identify improvement opportunities. If they find discrepancies between expected and actual labor costs, they can take corrective actions to enhance efficiency. Speaking of discrepancies, variances in direct labor costs can reveal much about a company's performance. Favorable variances occur when actual labor costs are lower than standard costs, indicating cost savings. Conversely, unfavorable variances arise when actual costs exceed expectations, suggesting potential inefficiencies. Analyzing these variances is crucial for understanding labor utilization effectiveness and overall production performance. Fabri Craft employs several strategies to manage these variances effectively. Regular monitoring and analysis of labor costs against established standards help identify discrepancies promptly. When variances occur, the company conducts root cause analysis to determine underlying issues, whether they stem from production inefficiencies, skill gaps, or inaccurate cost estimates. Continuous improvement initiatives are also a hallmark of Fabri Craft's approach. By fostering a culture of feedback and employee engagement, the company encourages suggestions for enhancing labor efficiency and reducing costs. This collaborative atmosphere drives ongoing optimization, enabling Fabri Craft to adapt to changing market conditions and customer preferences. Training and skill development play a vital role in maintaining efficiency. By investing in employee training, Fabri Craft ensures that its workforce is equipped with the skills necessary to perform their tasks effectively. This investment not only enhances productivity, but also reduces errors, ultimately leading to lower labor costs. And let's not forget about performance incentives. By implementing performance-based incentives, Fabri Craft motivates employees to align their efforts with cost control objectives. Recognizing and rewarding high-performing individuals fosters a culture of excellence and drives productivity, further contributing to effective labor management. Now, let's touch on the distinction between direct and indirect labor. Direct labor is the workforce directly involved in the production process, while indirect labor includes employees who support production but aren't directly involved in manufacturing tasks. Both roles are vital to Fabri Craft's operation, as indirect labor ensures the smooth functioning of production and supports the direct labor force. Accurately categorizing labor costs as direct or indirect is crucial for cost allocation and analysis. It helps Fabri Craft track expenses effectively, evaluate workforce performance, and identify potential cost reduction opportunities. By understanding the contributions of both direct and indirect labor, Fabri Craft can optimize resource allocation and maintain better control over direct costs. Improper labor cost allocation can lead to significant consequences, including undercosting and overcosting. Undercosting occurs when actual labor costs are lower than the true costs incurred, resulting in reduced profit margins or losses. Overcosting, on the other hand, leads to overpriced products, making them less competitive in the market. Both scenarios can negatively impact profitability. To prevent these pitfalls, Fabri Craft employs strategies like detailed cost analysis, activity-based costing, and regular cost reviews. By meticulously analyzing labor costs and comparing them against industry benchmarks, the company can ensure accurate cost allocation and avoid undercosting or overcosting. In conclusion, Fabri Craft's commitment to maximizing efficiency and controlling direct labor costs has positioned the company for success in the textile production industry. By implementing effective strategies and practices, they have achieved efficient direct labor cost management while maintaining high productivity. Understanding the significance of accurate measurement and allocation of direct labor costs is crucial for any business. Fabri Craft's approach serves as a valuable blueprint for companies seeking to enhance their productivity and profitability. By learning from their strategies, we can all strive for greater efficiency in our respective industries, ultimately benefiting both our businesses and our customers.